Good evening, everyone. Welcome to the weekly webinar. This is Wayne, Head of Research and Education for Fullerton Markets. Warmly welcome, everyone. Yes, I'm back from my break. So, a 2 weeks break. So before we jump start into the webinar, I was in Korea from 7 to 15 of November. It was autumn switching to winter, so it's slightly on the cold side, between 6 to 16 degrees. So of course, in my trip, the most happening event, of course, some of you may know, is the US election. So later we'll talk a bit of that. So now I'm back, so we'll carry on with the weekly webinar. So as usual, the webinar will be divided into three sections. The first one will look at what are the key events that has key news that we focused last week. And the second segment will look at what are the upcoming news or data that can possibly trade. And the last segment, of course, we will jump straight to the charts to look for any trading opportunities. So feel free to keep your questions coming. I'll take the questions along the way. Of course, last week, I shall not go through the data. I believe all of you know what are the actual data that has come out. But some of the interesting news, rather, that has so-called attracted my attention. So after I come back, I have a lot of things to catch up. So I was reading quite a fair bit. So there are some things that caught my attention. The first one, of course, like I mentioned, the US election was over about 2 weeks ago, slightly less than 2 weeks. Of course, the result is considered quite a surprise to some people. Of course, prior to the election, most people, I would say, would expect Clinton to win. But however, closer to the election day, we noticed that the fight is getting hotter, and the poll results are getting closer. So I guess there are some people already expecting a possibility of a Trump victory. So eventually, of course, I was watching the news. Whenever I go, even in Seoul, in the cafe and the eateries, they have a television. They will broadcast news about the US election. So on the 8th, on the 8th is the election. On the 9th morning or so, they were doing all the vote counting of the various states and things like that. So we were watching the news, and along the way while traveling and then we see that Trump is winning along the way, and seems like he's going for a victory. So of course, ultimately, we know he won. But what is important thing is he won, and of course the immediate action of the market is not so favorable. It was a selling off in the US dollar and selling off in the stocks as well. But it's a short span of selling off. But after that, the reverse happened. So the bonds get sold off, and equities came up, and then US dollar strengthened as well. So of course, this is the after effect. With the benefit of hindsight, it is telling us the market is sort of expecting some good stuff from him. Good as in good for the economy. So it remains to be seen what he will do in his next few years. Okay, but some of the effect of the Trump victory gets spread to the other world, as populists among the other nations get to gain traction because of Trump victory. So populists are politicians in other countries that sort of represents the people, man on the street, they are known to represent or to speak on behalf of ordinary people or men on the street. So this group of populists around the world is actually gaining traction. So to highlight some of the cases, of course, the first one is Italy. Italy is the third largest economy in the Eurozone. So after the US election, the next so-called major political event is actually from Italy. They are running a poll on 4th December, which is in about 2.5 weeks or so. So a lot of countries will run referendums and things like that. Of course, this referendum is proposed by Prime Minister. So the referendum will vote whether to accept his proposal for changes. So these are political so-called agenda. So he proposed to make some changes to the government and things like that, or policies, or how things are run in Italy. So but what is important about this poll is because, as you can see from this Bloomberg report, I have do some snapshot. Of course, you can Google this title and then you can read the full report. But I did a snapshot of the report and highlight the sentence. As you can see over there, Prime Minister Matteo Renzi has promised to quit if voters reject the referendum. So this is interesting. It is like he is, to me, in my opinion, is like threatening the people. If you don't agree to my changes, I'm going to quit, that kind of thing. But I don't think that works for people. So if they are really not happy or they are not agreeable to the change, of course they'll vote to say no. So as you can see, the chart below is actually the informal poll to see what is the likely to check what is the general so-called feeling of the people. So as you can see, the blue color are the people who is likely to say no, whereas the orange color is the people who are willing to say yes to the referendum. So as you can see, the number of people that says no is more than the number of people who say yes. So if the actual outcome is really no, then since the Prime Minister has promised to quit if people don't accept his proposal, then he has to so-called fulfill the promise since he's the one who said it. So there will be some uncertainty and will cause some so-called how should I say, will have some impact to Italy. Imagine the Prime Minister quit, so who is going to take the lead? So of course there won't be like total chaos, but things will start to be messy, and then most likely they will have to prepare for election very soon, that kind of thing. So a lot of things need to be rushed through if Prime Minister really quit. So what has this got to do with us who are trading the currency market? So the third largest economy in Eurozone, if it is having some political instability, what do you think will happen to the euro? Of course, it will definitely have certain impact. It is the third largest economy among the Eurozone. So chances is if PM really quit, we could possibly see selling off in the euro, and this could be one of the reasons why euro remains weak in the recent weeks. Of course, the other reason why euro is weak is because the dollar is strong, so it makes it seems like the euro is weak. But if you look on the euro side, euro has the reason of causing the euro to be weak as well. So Italy is only one of the country in Europe that is having some political so-called drama, and it is coming up. 4th of December is not very long. It is 2.5 weeks. So let's see what's the referendum result is going to be. And the next country, interestingly, we're going to look into is France. So France is the number 2 economy in Eurozone. So as you can see, the number 3 and the number 2. So number 2, what is happening? French presidential election is coming up as well. It will be in April next year. It is pretty fast as well, less than 6 months. So it is considered the next big event as well, since it is, especially to us currency traders, so the second largest economy of Eurozone, definitely will have a certain impact on the euro as well. And what is interesting, because of the Trump victory, as you can read, one of the potential candidates, yes, Le Pen, as you can see over there, is a leader of anti-Euro National Front. So in short, she is anti-Euro, means she is someone who doesn't want France to remain in the Eurozone. So if she won the election in April, there's a possibility she may call for a referendum again. For this time round, it's called Frexit. So we have Brexit, and the next term that we will hear, I would expect to hear quite a fair bit, even in December or leading up to 2017, would be this term called Frexit, Frexit, France exit. So of course, putting aside what is the chance of that happening, but as long as there's a possibilities, you know how market works, the fear factor will start to kick in, even though it's just a 1% chance of that happening. And not to mention, for this Le Pen, her popularity is growing because of Trump victory in US. So it'll be an interesting thing to look out for and watch out or follow the so-called the progress of this French presidential election as well. So that will be something that all of us currency traders should be looking at from now, or maybe in the first, at least the first to the second quarter of 2017. So with all this as the background, even though the Eurozone may be performing well in their economy and things like that, it may not strengthen as much. So just keep it at the back of your head, these two key events. So in case you are wondering why Euro is so weak recently, so there are some political events that are going to happen or happening in the background that investors and traders are worried about. So these are the two most noticeable news. The next one that I want to highlight is about oil, because OPEC is going through the negotiation, discussion and agreements to seal the deal for the output deal. So as you can see over here, this report is just out today. So it is stating that the bets on WTI is one of the crude oil. The other one is Brent. So they have a different category of oil prices. But for WTI, there's statistics showing that there are a lot of money managers, producers, consumers that are making bets on WTI. That means they are entering a position. So it could be a buy position or a sell position. So it just means that more people are jumping in, expecting volatility in WTI. So of course, as you can see, the oil prices or the WTI has rose recently. So it is telling us that market is expecting some positive outcome from the OPEC meeting, which is scheduled in, if I'm not wrong, end of November. So market is expecting some finalized so-called deal, no longer some just discussion or talking about it. Market is expecting something concrete and finalized about the output deal by end of November. So if that really comes true, then possibly we could see WTI heading up towards the $52 again. So of course, if the OPEC disappoint the market without any conclusion or any deal being sealed, then possibly we could see the market selling oil again, which is not a good thing. So for now, market is expecting something good. So in our weekly research, we also mentioned about this oil. So we could buy into the rumors first. When the news is out, possibly sell it. So it is a typical buy the rumor, sell the news kind of approach for you to consider for the next maybe 1 or 2 weeks. So why am I highlighting this besides taking the buy the rumor, sell the news approach? This is telling us that possibly the volatility of oil is likely to go up. So meaning to say, manage your risk. So when you put your stop loss, you may want to consider a wider stop loss to cater to a large volatility. That's number one. So the worst thing that a trader could encounter is there's a whipsaw and then our trade got taken out at the stop loss before it moves in the direction that we are in. So that is usually when market is very volatile, it would our traders could encounter that. So since now with this in mind, if when you are trading, you could widen your stop loss to be more conservative to cater to such so-called volatility. That's number one. Number two, since if it is volatile, so meaning to say if you are right in your position or in your direction, then possibly it could move more than what you expect. So this is a clue for you to, maybe you could consider using trailing stop instead of hard take profit. So when market is volatile and it really moves, you don't want to just take a small profit and then miss out a big chunk of potential profits. So one consideration that for you to consider is you may want to employ so-called trailing stop or an open profit target for your oil trade if you ever take any oil position. Let me check out the question. There's a comment. Brexit question mark ha ha ha. Yeah, these are all the terms that is being coined by the market. France exit. So of course we can laugh about it, but there is a certain possibility after what happened in US. So you never know what really could be possible. And there is really such a so-called candidate who would likely propose a Brexit referendum running for election. So anyway, no point speculating now. Let's watch the market as if we are watching a drama. It's very interesting to see how the episode unfold every day. So of course, the other episode that we will be continue to watching for the, I think at least for another 2 years, would be the Brexit Saga. So it has quieted down a bit, even though I have not mentioned in my, or I don't have a slide for Brexit, because it has so-called quiet down a bit because it's waiting for the next ruling by the Supreme Court. Of course, the initial court ruling is that the Article 50 needs to go through Parliament so-called approval before it can be invoked. So now I think it's going through the appeal, and before the next ruling is out, it could be either later this year or even early next year. And by then, before anything can happen, it will be like mid of 2017 already. So time passed very fast. So for now, seems like the market or the investor or traders is putting Brexit on hold at the moment. There's not too much of buzz around it yet, but in the next maybe 1 or 2 months, when the next court ruling is expected to be out, then people will start to think about it again. So the next question that I have, I think I can take it now. What is oil price impact on Kiwi dollar? I don't see a direct impact on the Kiwi dollar, as per if the oil price go up, Kiwi dollar is likely to go up or come down. That kind of correlation, I don't really see that kind of direct relationship. By indirect, how oil price may impact Kiwi, or rather it will impact Kiwi and US dollar almost in a same way, because oil price affects the price of goods, and if it affects the price of goods, means it affects inflation as well. So that's one of the relationship that we see. And when it affects inflation, which central bankers are watching, then it will cause them to make certain policy changes if need to, depending on how is their inflation situation in their own country. So it is like a chain effect kind of thing. So I don't see I don't see a direct correlationship, but there's definitely a chain being linked to the respective country and ultimately the currencies. So the next question is it common for trader to focus on just one currency pair? Yes, it is common, especially for new traders. Reason is because every currency pair has their own characteristics, for obvious reason, because currency pair is relative so-called strength between the two currency. For example, Euro USD, it is matching the situation in Euro against the situation in US. Whereas USD JPY, it is comparing the situation in US versus the situation in Japan. So since you have all this relationship, of course, the so-called the behavior of each currency pair will be different, because every country is different. Some countries are export-oriented, some are import-oriented or domestic consumption based. Some rely more on oil exports. Some rely more on manufacturing, producing of goods. Some rely on agricultural exports. Some rely on dairy exports. So every country have their own characteristics. So if you put all this together, you will see that all currency pairs will have a different behavior. So when you try, as a new trader, when you try to trade many currency pairs at the same time, you start to get confused, because different currency pairs tends to behave slightly differently. So for new traders, they like to just focus on one or two currency pairs first. So once they get a hang of it, they will start to explore the other currency pairs. But there are also so-called experienced traders who chose to just focus on one or two currency pairs and be specialized in it. So there's no hard and fast rule whether you trade one currency pair is better than someone who trades 100 currency pairs. So the benchmark for traders is always whether you are making money. It's not whether you are trading one currency pair or trading 100 currency pairs. So hope that answer your question. The next question is why pound dollar rallied when US dollar is strengthening. That is good question. So like I say, US dollar strengthening it means that in general it is strong. But like I say, in all currency pairs you have to compare to what is happening on the other side as well. Of course, for Aussie dollar, you are comparing US dollar, US against Australia. What is happening in Australia? So of course, if US is strong and Australia nothing is happening, of course Aussie dollar will go down. Dollar and Japanese yen. If US dollar is strong but nothing happening in Japan, then of course dollar yen will go up. If you look at Kiwi dollar, if nothing is happening in New Zealand but US dollar is strong, of course Kiwi dollar will drop as well. But if you compare pound dollar, yes, US dollar is strong, but pound dollar could have reasons for it to be even stronger. Then even though with a strong US dollar, pound dollar can still rally. So why pound dollar rally? Because in the past few months, pound dollar has been dropping because UK Prime Minister has been saying that they will invoke Article 50 by early 2017, which is very fast. So once they invoke, that means they will start the negotiation of the agreements and possibly exiting from EU. So it was earlier than what the market expected, because market is expecting maybe close to end of 2017 before a decision is made to invoke Article 50. So since the PM say it will be earlier, of course the market react faster by selling the sterling. Because UK exit EU, market is expecting them to take a hit, their economy to take a hit, because they have to forgo certain benefits that they are enjoying in order to gain certain advantage over tighter immigration control and things like that. So they will lose their trade benefits, which will hurt their economy. So that's why market decide to sell the sterling. But recently, because of the court ruling saying that UK PM cannot just invoke Article 50 as and when she likes, needs to go through Parliament approval. So there's hope that the Article 50 will be delayed. So the reverse effect now kicks in, and we see the sterling dollar strengthening, and some people are buying. So of course it's not rallying a lot, but it's still holding up well against the US dollar. As you can see, the other counterparts of US dollar is actually weakening against the US dollar, but sterling dollar is still holding about the same level as before the US election. So later we'll go on to the charts and look for trading opportunities. Okay, so that's about some of the key events that were happening. Something to take note that will possibly impact us in the next few months as well. So it's good to be aware of all these events. So next we'll move on to look at the data for this week. I've scanned through the calendar. I think because I just came back from holiday, so the market decides not to announce any major data. Now that is supposed to be a joke. It just happened that this week is a bit light on data, meaning to say there's not many high impact data to be released. So most likely market is taking a break before next week. So next week it will be the non-farm payroll before December FOMC meeting. So it will be a big week. Next week, I think the market will focus a lot of non-farm payroll, but no worry, we'll talk more about that next Monday. So for this week, the only noticeable so-called news to watch out for is on Thursday. So Thursday, 2 a.m. GMT plus 8 time zone. US FOMC minutes. So this is a minutes of the last meeting. So it is a more detailed minutes. Of course, we do not expect much so-called deviation from what Janet Yellen has conveyed or commented recently. So Janet Yellen is still much on track, or has given very hawkish comments, giving market almost a certainty that a rate hike will happen in December. So currently I have read that the market is pricing in a 96% chance of a rate hike. So 96% chance is almost a confirmed thing. Of course, nothing is confirmed in the financial market, but as high as 96% is as good as market is expecting a confirmed rate hike already. So unless there is a deviation in the actual meeting minutes, which I do not foresee, but if it really happens, then possibly we will see a US dollar selling off quite heavily if there's a deviation. So you can imagine when market is pricing in a 96%, suddenly scale down to, maybe the chance of a rate hike is only 60%. That is quite a big change. So with such a big change in the expectation, it will be quite a big selling off in the US dollar as well. So of course, it is tough for trader to trade during the minutes. You have to watch or listen to it closely. It is not as easy as trading the data. But this is something to be aware of in case you have any US dollar position prior to Thursday 2 a.m. So chances is maybe 3-4 hours or even 5-6 hours before the FOMC minutes, or the dollar crosses, the major pairs, the major pairs will not move a lot. Chances is because market may be waiting for the FOMC minutes to be released. So that's on Thursday 2 a.m. GMT plus 8 time zone. The next data to watch out for would be the Eurozone. This is the German IFO business climate. Previous figure 110.5, expected 110.6, almost on par with the previous figure, slight improvement in the business climate. So this is a gauge of the sentiment in the business world. So one possibility, since the euro dollar has been dropping, or weakening because of some political so-called background, if the data is also worse than expected, then maybe the market will continue to sell the euro. So this is our suggestion to put a pending short on euro dollar if the actual number comes in smaller than 109. Meaning to say it has to come in at 108.9 or lower. Okay, there's a comment on my screen saying that your jokes are just getting worse after the holiday. Yes, thank you very much for the compliment. Okay, I know some of you are laughing off somewhere at home. Let's back to the screen. Okay, so this is our suggestion. Pending short euro dollar if the actual number is less than 109.0. Okay, so before we move on to the charts, this is the Accelerator Bonus. In case some of you have not taken advantage of it or have not opened an account with Fullerton Markets, do not miss out this promotion. It is the most popular promotion among our clients. So you can check out the terms and conditions, the details of this promotion on our website. So it is very easy to to get as high as 10,000 US dollar for free. So do not miss out these promotions. And I just happened to see a question on my screen. Between variable spread and commission-based fixed spread, what are the main differences between these two? Which one is more advantage? Thanks. For Fullerton markets, we do not offer fixed spreads. So I'm not too sure, are you referring to other brokers? So if other broker, their spread and commission charges will differ from broker to broker. So I can't comment on that. But if you are referring to our ECN, our variable spread and our commission-based ECN. Okay, so we offer these two types of spreads as a choice for our traders. So there's no clear-cut advantage of one spread is better the other. It's up to our traders' preference. So for variable spread, there's no commission charge. So of course, for variable spread, it is slightly wider as compared to ECN. ECN is the tight spread that we get from our banks and liquidity providers. So there's the raw spread that we get from them and we pass it on to you. So on top of that, we have to charge a commission because it is a raw spread. So there's no, we do not mark up the spread. So the commission will be 10 US dollar per lot. So for those, we have clients and traders that compares the variable spread and the ECN spread, but after factoring the commission, it is almost on par. So that's so it depends on traders. If you are a trader like me who doesn't like to see commission being deducted on your trading report, then you will be like me that goes for variable spread. So of course, if you want a tight spread and you don't mind seeing a commission being deducted, then you go for ECN spread. So to me, it's not a very big difference when it comes to end of the day when you look at your trading result. So hopefully that answer your question. Okay, good. So of course, if you have any question about the promotion and how to open an account with Fullerton Markets, if you have not opened, then you can always approach our friendly support. Just go to our website and live chat with them. They are online 24 hours from Monday to Friday as long as the market is open. So now we are moving on to the final segment. Let's go to charts to look for trading opportunities. So for this segment, feel free to type in any currency pairs and the time frame that you want me to look into. Okay, so now we are on the chart. What you see on the pair dollar yen daily chart. Okay, so dollar yen daily chart, that will be the first. Oh no, there's a, wow, this gentleman must be a regular of my webinar. He has typed in the currency pair and time frame even I start the segment. So the pair is don't worry about the dollar yen pair. I'll go into it later. So the first pair is a pound kiwi H4 chart. Okay, so I shall look at a pound kiwi H4. Okay, so this is the pound kiwi H4 chart. A very nice consolidation over here. So the the immediate support and resistance for this consolidation, for your reference, 1.7720 and 1.7460. So for this week, there are not much data that will really impact this pair. So I do expect the price to follow or to be range bound within this support and resistance. Unless there is a big surprise in the UK second estimate of GDP. So usually there's no big surprise on the second estimate usually. So of course if there is, then this is possible to see. Either if it's a good GDP, of course you will head upwards. If a bad one, then you will head downwards. So on Kiwi side, RBNZ has cut interest rate while I was in Seoul. So that would be the final cut for this year. I don't think they will do a back-to-back rate cut or whatever. No reason for that to happen. So that will be all and all for now. So Kiwi, and there's no so-called big data that will affect the Kiwi. So that will be my comments for pound Kiwi range bound for this week. So meaning that you can employ a short-term scalping strategy if you want to, or a range bound strategy. Okay, a range strategy. Okay, any range strategy that you know, you can apply. And since it is range bound, it is usually good for scalping. So these are my comments. So of course for range bound strategy, as it heads towards the simple one will be as it goes down to towards the support. So once it bounces up, possible to buy, or if it goes up to the resistance, once it turns down, possible to sell. So this is a very classic sort of range trading. Okay, the next currency pair, yes, dollar yen. I'm coming up to it. Dollar chart, daily chart, sorry. Okay, so this is dollar yen, very sharp move, especially after the election. You as you can see the selling off, the immediate reaction after the US election result is out. You have a sell off in the dollar, but it recovered pretty fast, and days after it keeps on going up and up and up. So of course with rate hike expectation coming in as well, that sort of boosts the strength of the dollar. So market is pricing in a rate hike. So two main factors that cause the dollar yen to head even beyond 111. Okay, it has briefly breached 111. So now it's more or less hover in 110 region. So from now until next week, if you ask me, if you have a long position, let's say for example, if you have entered a long position somewhere here, and if you have not closed the position, you will be staring at floating profits. And the only events that possibly can push the dollar higher, FOMC. But if you look at it, market has already priced in almost a certainty in the rate hike. So what else is beyond certainty? Unless it's being announced. But they are not going to announce a rate hike this week. So what other possibility is that maybe the FOMC meeting minutes is not as hawkish as expected. So if that happens, do you think the US dollar will strengthen or weaken? It will weaken. So now put yourself in the position of someone is holding a trade with floating profits. What do you think that trader will do this week? So after I so-called mention the possibility, chances is the trader will start to take profit first. Because no matter what happens in FOMC, dollar yen is unlikely to go anywhere higher since market has already priced in a rate hike in December. A high chance some more. It is not as if market has only priced in a 50% chance of rate hike. So when FOMC comes out, the chance can go up to 80% or 90%. So now market has already priced in 90% that there will be a rate hike. So what else can it be? It will not be 100%. It will be maybe 99%, but will the dollar yen go up a lot? It would quite be unlikely. So if you look at all the different scenario, chances is the only possibility is dollar yen may come down if FOMC is not as hawkish as expected. So knowing that, chances is market may start to wind down their position, meaning they may take profit or close off their position and take the profit first and then wait for next week to see whether want to re-enter the positions again. So if the profit taking has caused dollar yen to retrace very much downwards, then trader may start to, maybe it's a better price or another opportunity to get in again. So that's my opinion on the dollar yen. So possible profit taking this week by long position holders. So if that happens, dollar yen may retrace downwards. So of course the next question you will ask me is, so where would it retrace to? My first so-called milestone could be here. Okay, in case you ask me why, let me just zoom in first. Okay, I have feedback that my candle is too small, so now I will zoom in for you to see. So hopefully this is big enough. I can't zoom in too big, my apologies, because I want to see a certain amount of candles. So if I zoom in too big, I don't see the amount of the amount of candle to give me a right perspective of what the market is doing. So I hope that this size is clear enough for you or for those of you. So the first support I would say that the market possibly would retrace to is the pause over here. As you can see, after a too strong bull candle, there's a pause over here marked by a little bear candle with tail. So you see the body is very small. It shows you the market pause there for a while before it pushes it higher. So when there's a pause, a previous pause, means that a possible profit taking happens over here before. So when market retrace back to here, those who have taken profit at that point in time may enter again. So the price is around 109.10 round number. That will be the first region. I would say the profit taking, if it happens, may push the price down to 109, which is about 100 over pips away. So of course, whether will it push really to that region, I'm not too sure, but definitely if profit taking, you will head towards that direction. Yeah. So of course, I don't think profit taking will cause it to fall to the next pause, which is quite a distance away. It's at 106. .70. So that is about like 400 pips away. Okay. So of course this is on a daily chart. So when there's profit taking in the next few days, we'll see how much is it drop. If it happens, then next week will be something to watch out for, because next week will be non-ADP and non-farm payroll, the key data that most likely will seal the December rate hike depending on the actual data. So we'll talk more about that next Monday. So for now, this is my take. So if you want to catch on, if you think that dollar yen can possibly go higher because there's a rate hike is coming up, you may want to wait for next week before entering a position, because it's no point entering a position on late Thursday or Friday, and you have to hold it over the weekend. So since I mentioned about profit taking this week, then some of the trader may choose to go down to lower time frame and go a lower time frame to look for possible shorting opportunities, counter trend, so-called strategy. So of course this is in the individual preference. So I'll just put my comments down here in case there are counter trend traders among us. So if you are not a counter trend trader, then you can skip this. It doesn't mean you have to take every trade or every opportunity. So if you are not, then you stick to what works for you. So I'm just giving suggestions in case there are counter trend traders among us. So possible to apply counter trend strategies in a lower time frame. Because if you apply a counter trend strategy on a daily chart, the entry may be end up next week, and it may not be a good time to short the dollar yen next week, with key data coming out to seal the deal for December rate hike. So that's why my suggestion is to possible to apply counter trend strategies in lower time frame, so that the trade can be taken earlier and exit faster. Because if you take on a lower time frame, your position size is smaller in terms of pips. Whereas if you take it on a daily chart, chances is your position is possibly in the 100 to 200 pips kind of thing. So it will take longer to exit. So that's my comments on dollar yen. The next chart will be dollar Swiss franc. Dollar Swiss franc. For dollar Swiss franc, this will be the chart. Okay, let me put the vertical line so that we can review it next week. This is today, this is now. For dollar Swiss franc, which time frame is that? Let me check. Never mind. So the dollar Swiss franc H4, as you can see, this is the time when the result is being released. So the 4-hour candle went down and the next 4-hour candle went up. So that is how the market reacted initially and after. So in any case, the dollar Swiss franc is heading upwards, just like what the euro dollar is doing, but in the opposite direction. As you can see. So if you want to trade the dollar Swiss franc, sometimes you can trade the euro dollar. So both of these pair, right? Try not to take positions on the two pairs at the same time, because these two pair is highly inverse correlated, meaning that if one of the currency pair goes up, the other chances will go down, and vice versa. So whatever I mentioned on dollar Swiss franc most likely will be applicable to euro dollar as well, but in the opposite direction. So if I give any suggestion to go long on euro dollar, most likely the opposite will be applicable for dollar Swiss franc short. So as I can see, dollar Swiss franc, yes, there are requests to do dollar Swiss franc. There are also requests to look at euro dollar. Yeah, there are a few requests to look at euro dollar. So in that case, I'll look at euro dollar. So for those who request on dollar Swiss franc, basically you just flip my comments around. I'll do 2 in 1. Euro dollar H1. Okay, so I'll look at H1. Anyway, whether it's H1 or H4, I don't think the direction will change. It is downtrend. Okay, so this is H1. So of course, the German E4 may, if the data is really good, it may cause a short-term spike of the euro dollar upwards, but I don't foresee a big move upwards even though the data is good. Ultimately, the problem in Europe is still weighing on the mind of investor and trader. even though it may not happen tomorrow or next week or next month, but definitely it will be in the mind of a trader that things are not going as well as they want to in Eurozone. So meaning to say there will be less trader going in to buy euro at this moment. Buyer will be very cautious where to buy. Most likely at a lower price, then they will consider buying for a counter trend trade, that kind of thing. So for now, this is euro dollar. For this week will be less reliant on data, because there's not much of data that will be released. So the technical trades most likely would dominate this week. So apply technical analysis to trade the charts for this week. So the euro dollar is so-called consolidating in quite a tight range. Over here, oops. You may be able to see a similar range. This sudden spike down, sometimes I do ignore because it's only one point that is referenced lower. Okay, so roughly this will be the boundaries of euro dollar 106.50 and 105.80. So if I were to switch to a dollar Swiss franc, just to let you have a comparison of a H1 chart, you will notice possibly you will see a consolidation range happening as well. Of course, the support resistance up to you to mark for dollar Swiss franc. But the comments will be similar. Chances is you will remain in the range for this week, unless there are big surprises in the German IFO data. So of course, how to trade the euro dollar, if you ask me, there's I'm going to zoom in. You see a lot of candles showing indecision. What do I mean by indecision? Just to describe to you, as you can see this candle over here with a very tiny body. The price fluctuates but decide to settle at the opening price or close to the opening price. This, although is a bull candle, but the body is very small as well. So again, during that 1 hour, fluctuate up and down. Not a lot, maybe 20 pips, but it's still up and down. And can't decide where to go. Settle near the opening price again. Okay, it could be a 1 or 2 pips away only. And the third candle, the third hour, again you see the price shooting up and coming down, and this time round decide to settle exactly at the opening price. And now it's the fourth candle. So for the last 3 candles, it is telling me that the market is non-decisive. Where is it heading? So if it has a candle that confirms a direction, chances is maybe it will continue in that direction. Of course, knowing the resistance it is very close to the resistance. So even if this candle is closed as a bull candle with a significant body, I may not choose to go long because immediately it will hit a potential resistance. So it may just go in a bit before it reverse downwards. So I would rather prefer to see a bear candle instead. A bear candle that closes somewhere here, which is beyond all the indecisive area. So the indecisive is around this price. Okay, because you see all the body of the candle is around that. About 1.0630 plus minus. Okay, I'll put a price label there so it's easier to see. So 1.0630 is the indecisive region, plus minus. So if there's a candle or bear candle that closes below it, maybe at 1.0625, then maybe it is telling us the market is deciding to go that direction. Then around that or slightly lower 1.0625 possibly could go in for a short. Okay, of course this is only for this week. Next week we will come Monday we'll have another opinion on this chart again. So this is the comments possible to short. If a candle closes lower than 106.25, then of course your potential target will be somewhere here above the resistance, of course, and potential target will be before it hits the next support. So this is about 33 versus 33 pips trade, 1:1, and 33 pips possibly would possibly would get out by end of the week. So if it really so non-volatile for this week, then I would suggest to close out the position before market closes for the week. No point holding the position. Okay, so this is the suggestion. This is considered a range bound trade. I better leave it in zoom in manner. Okay. I'll shift the price label slightly. So that you can see the prices. So it was marked at 10650, which is somewhere here, a round number actually. And 10580, that's the support over there. Okay. So that's euro dollar for you. So of course for dollar Swiss franc, the direction would be opposite. Of course, the entry would have to refine it based on the chart itself. Can I look at wait, the next pair is actually Aussie dollar H4. Okay, I'll look at the Aussie dollar H4. This is Aussie dollar. Aussie dollar H4, very sharp drop. If you notice, it is similar to euro dollar. Okay, if I open the euro dollar H4 chart, right? Okay, this is a euro dollar H4 chart. This is the Aussie dollar H4 chart. Okay, both drop almost very significantly as well. So Aussie dollar H4, after such a sharp drop, possibly now as is happening, profit taking. So after profit taking, possibly to go in for a short again. So I don't foresee the profit taking to be as much as 100 over pips to this level over here. That's quite a big profit taking, and for that to happen, most likely there's little data in US, the unemployment claims, etc. It is showing less than expected, which caused the market to have a slight dump in December rate hike. In that kind of situation, then possibly market may retrace up to this level. So for now, I don't foresee having a big surprise in those data to cause such a move. So one way is rely on indicator to tell us when is a good time to take a short. So one of my most commonly used, or my commonly used indicator is actually the stochastic. Of course, if you are employing or using other oscillator, you can apply the same theory as well, because the way you use oscillators to help you in your trade is there's some similarity in that. So for oscillator that has overbought, oversold region like stochastic, RSI, CCI and things like that, you can apply the same theory. If you are not using stochastic but you are using other oscillators, you can also apply this so-called theory on the indicator that you are familiar with. So for stochastic, the 80 to 100 is where the over bought region is. So very simple, once the stochastic goes into the overbought region, it is giving us a sell signal. So once the stochastic comes back below 80, that is the signal to enter. So chances is that will happen when price creeps higher. Creep higher and then pause. So a more objective way is, because for now I can't foresee how high the price will go to. So objective way is to rely on an indicator to tell us where is the possible turning point. Okay. So this is one way. stochastic overbought. Once it turns down, this will be the time where it gives you a sell signal. So on the chart, where would that be? I really can't tell, but the price will move up, down. Once it has this kind of movement, that will be the time to consider a short position. Okay, so that's Aussie dollar. Okay, there's a question. What is scalping strategies? Scalping strategies just mean that these are strategies that are very short term. So typically they could allow you to get in and out of the market within minutes or within half an hour kind of thing. So they take smaller positions. Typically it could be as low as 1 pip or as high as maybe 10, 15 pips or 20 pips. So usually the aim of scalping strategies is to take small profits out of the market. Small as in terms of number of pips. So you could be taking 3 pips, 5 pips, or 7 pips, 12 pips, whatever. So typically it's less than 20 pips from the market. So these are considered as scalping strategies. Fast in, fast out. Okay, there's a trading question. I might as well take the chance to answer. I realize I always miss the boat. When I check, it is either moved too far from my targeted entry. Any suggestion to avoid this? Okay, it depends on the time frame that you are trading. If you are trading on a low time frame, meaning it's a 5-minute chart or 15-minute chart, such low time frame you tend to need to monitor it closely. Of course, it is tiring to monitor the market for like 8-10 hours a day. So if you are trading a low time frame, meaning to say you are trading 1 minute to 15-minute chart, this kind of time frame, chances is you can select a period, maybe a 2-hour or 3-hour slot. If you are trading 1 minute, you can choose a 1-hour slot that you see there, and you monitor your chart and you trade for that 1 hour. If you are trading a low time frame, you can't afford to do a periodic or once a while check the chart to whether see there's any trade. If you do that, chances is you will see a lot of missing opportunities. That's number one. Of course, if you are trading at higher time frame, the H1, H4 or daily chart, then a daily chart will not be a problem, chances is, because 1 day, 1 candle, I don't think you will miss a it's not easy to miss a daily chart trade, to be honest, because 1 day is only 1 candle. So typically you have quite ample time to enter your trades. So let's look at the next category of maybe M30 to H4 or H1 to H4 charts. So H1 and H4 charts, typically they wait for candle to close before they enter, because as the candle is moving, you don't know whether is it going to be a bull or bear candle. There's no confirmation. So most of the H1 and H4 strategies that I ever encountered, they will need to wait for the candle to close first before entering. So if that is the case, we will know that the H1 and H4 candle only closes on the hour mark, meaning to say the trading opportunity always happens on the hour mark. Example, it will be either 10 p.m., 4 p.m., 3 a.m., 2 a.m., 1 p.m., the hour mark. The trading opportunity will not happen at 2:45, 3:15, that kind of timing. So with that in mind, meaning to say you have to have a certain discipline to check the chart on hourly basis or a few hour basis, because even if you trade the hour chart, it doesn't mean the opportunity will appear every hour. So sometimes it may take a few hours before it happens. So what I want to stress is you need to check it near the hour mark. You don't need to check the chart at 2:30, because if it happens at 2 p.m., you already missed that 30 minutes window, which would have missed the trade. So possibly if you are trading the H1, H4 chart and you find yourself missing the boat, I'm guessing that one of the possibilities is you are checking the chart not at the hour mark, but at the other timing like 2:30, 3:15 or 3:45, that kind of timing. So I would suggest that if you are trading the hourly or 4-hourly chart, to check it on the hour, at the hour, or maybe 5 minutes before the hour, so that you roughly gauge whether there is any potential coming up before you wait for the candle to close. So if you are trading the 4-hour chart, it's even simpler, because every 4 hours one candle, so you don't even need to check it on every hour, you check it every 4 hours. So hope my sharing helps. One final questions. I'm sorry I can't take all the requests, so if I've missed your request, my sincere apologies. So I'll take one final questions before we wrap up the night. For intraday trade, which time frame is best? So for intraday trade means you get in and out within the same day. So if you want to get in and out within the same day, your position has to be relatively small, meaning to say in terms of pips, maybe between 30 to 80 pips, that kind of range, depends on the currency pair. So a more volatile currency pair, you can afford to have 80 or even 100 pips. A less volatile pair, maybe you have to limit your trade to 30 pips, that kind of thing, in order for it to be an intraday trade which gets in and out within the same day. So the time frame we are looking at would be anything below 1 hour chart, maximum hourly chart, because anything beyond typically will give you a trade that is more than 50-60 pips. So any time frame 1 hour chart and below I consider a good time frame for intraday trade. Okay, we have time flies. It's 1.5 hours. So if some of you notice that my voice is running out, because I'm having a sore throat actually. So my apologize for the loss of voice. So we have come to the end of this week's webinar. So I hope that what I've shared is beneficiary to you, and look forward to seeing you next week, same time, same channel. For now, may the pips be with you. Have a profitable week as usual. This is Wayne signing off. Good night and bye-bye.